Well, Inox Wind has reported a good set of earnings. Net profit is up about 42%. We have Devansh Jain, Executive Director of Inox GFL Group, now joining us. Just a couple of points I want to highlight before we get into the conversation. So, execution and margins in H2 versus what they've guided. I think that will be something we'd like to understand from Devansh. Demerger and listing of subsidiaries, substations, asset business. And of course, the sharp growth in Inox Green's portfolio is something we'll highlight as well. Devansh, once again, welcome to the program. Are you sticking, first up, Devansh, are you sticking with your guidance of 1,200 megawatts and margin guidance of 18 to 19% for the year? Q2 margins are 20% plus. So will you raise your margin guidance?
Hi, good morning, Prashant and Nigel. Yes, I think we're very happy with the numbers which have just come out this quarter. Of course, H2 is much larger for us. But yes, we are sticking to and maintaining our execution guidance at this point in time. We've just raised it in the last quarter. And I do recognize that our margins have been higher this quarter. And hopefully we should end at higher margins than what we've guided for in the full financial year. But at this point in time, we're sticking to our margin guidance. Naturally, H2 is going to be about 70% of the full year's business. So looking forward to Q3 and Q4.
So it could be 20% plus, on margins and, revenue growth as well.
Well, as I said, we're looking forward to beating guidances which we've set out. We've already done that in Q1 and Q2, in spite of the fact that we've already raised guidances in the last quarter. But yes, hopefully we should outperform.
What's the order inflow outlook looking like in H2, Devansh? You said in your call that you might enter into long-term framework agreements ensuring large recurring annual orders.
Look, again, I would reiterate, I think our current order book is very, very strong at about 3.2 gigawatts, which gives us very, very clear, strong visibility for the next 18 to 24 months. Having said that, orders are the least of our worries. We've recently announced about 300 megawatts of orders. Lots of orders are in advanced stages of closure, which we will keep announcing as we move forward. But I think what we're looking to do now is strategically shift to framework agreements to secure multi-year orders. And I think that's something which we announced in this quarter, that we're looking at a couple of framework agreements, which should give us at least a gigawatt of recurring orders annually for every year for the next 3 to 5 years. So I think you should be hearing a lot more from us on that as we're moving forward. But I think it's looking very, very strong.
All right. Hi, Devansh. Good to see you. Give us an update on the demerger of the substation assets from Inox Green and its merger into the other subsidiary. I think that's Inox Renewable Solutions. Give us some timelines. And also basically, with regard to this demerger listing of IRSL, what's the benefit to Inox Wind? So an update on all of this.
Look, I think what we're doing is we're basically demerging the substation and the EPC arm of Inox Green Energy Services. And in the same scheme of things, consolidating it with the EPC arm of Inox Wind, which is under a company called RESCO, leading to automatic listing of what we call Inox Renewable Solutions, which will become the group's arm for all EPC works, for all our crane operations, for all our transformer manufacturing operations, and for the huge land bank and project site inventory, which is upwards of almost, 14 gigawatts of hybrid connectivity and sites which we control. The shareholder and creditor approvals are already in place for this. I don't think it should be too long. I think it should be the next few months. I'm not committing to timelines simply because NCLT is not in our control. We've done everything which we could as shareholders, management. As I mentioned, we've got all our approvals in place now. But I would expect in the next 4 to 5 months, we should see this business hopefully being demerged and listed as Inox Renewable Energy Solutions Limited. What that does is it creates a lot of value addition and is value accretive for both Inox Wind and Inox Green, simply from the perspective that Inox Green has a depreciation charge which moves out because we're removing this gross block. It also increases the ROC and ROE at Inox Green level. And at Inox Wind level, it leads to significant value unlocking and further shareholder value creation because the intrinsic value of the entire land bank and EPC arm gets unlocked. As I mentioned, this also Inox Renewable Solutions also controls the transformer manufacturing business as well as the crane ownership and operation business. So, all in all, a fairly interesting niche infrastructure engineering play, but very value accretive for both Inox Wind and Inox Green.
All right. Let's focus on Inox Green. Now, the portfolio is significant in the O&M segment because of the acquisitions that you're doing. And you have stated that Inox Green will become the largest renewables O&M company in India, I think so. Give us an outlook. How does it reflect in terms of numbers, ballpark revenue, EBITDA, profitability?
Look, so I think given our organic growth as well as some of the strategic investments we've made, through which we control, approximately 6.5 gigawatts of wind operations, our total O&M powered Inox Green currently is about 12.5 gigawatts. A lot of this, I would assume all of it, the entire 12.5, would be reflected in our financials in FY27. I think I can't commit to exact timelines, whether it's 3, 4, 5 months. But as I mentioned, over FY27, all of these investments should reflect in actual numbers. As I mentioned to you, we already control these companies. It's more a matter of time when they get reflected in exact financials. But certainly in FY27, you should see a multiplication, manifold increase in our profitability as the true reflection and full numbers of these 12.5 gigawatts start getting reflected. In terms of actual top line, I think 12.5 gigawatts should lead to approximately about 1,250 crores of top line. And at about 50% margins, that should, you can do the math, that should be at about 50% EBITDA margins. Having said that, I think we've also publicly stated that we're on track to become India's largest renewable O&M company, simply from the perspective that if you look at what our group IPP is doing, Inox Clean, as well as the solar manufacturing arm is doing, we expect to add, on average, between Inox Wind, Inox Solar, and Inox Clean, at least 5 gigawatts of capacity at Inox Green level every year. And this is besides the fact that we're still looking at multiple inorganic additions. So, I think next couple of months, we are well on track to become India's largest renewable O&M services company. But more importantly, at the scale of 12.5 gigawatts, we've created a very, very strong annuity business with very, very long-term contracts, which are married to us for life. And it just makes Inox Wind that much stronger because now we have a very large annuity revenue pool, besides the fact that the wind turbine manufacturing business, in any case, is a fairly high EBITDA margin business for us.
Very, very aggressive targets, very focused. Devansh, pleasure speaking with you. Thank you very much for joining us. Had more questions, but out of time since we are still... Earnings season has ended, but earnings, we're addressing a lot of earnings, so that's going to be the focus as we go forward, at least over the next 1 or 2 days as well. Thanks very much once again, Devansh. So a lot of guidance, especially on wind and, of course, green as well.